Russia's economy is in so much trouble that Putin, the guy who never admits defeat, had to go on state TV and openly confess that his economy is in a deep crisis.
Теперь по поводу самих расходов. 6,3%. Много это или мало? 6,3% ВВП России на нужды обороны – это 13,5 триллионов рублей. А весь наш ВВП – 223 триллиона рублей. Вот 13,5 от 223 много или мало? Немало. Немало. Мы заплатили за это инфляцией, но мы сейчас боремся с этой инфляцией. Да, целенаправленно идем к тому, чтобы мягкую посадку экономика в чем-то осуществить.
For a long time, the Russian government has been reporting growth statistics. But the reality on the ground tells a different story. Oil revenues have plunged by over 1 trillion rubles. Inflation has driven food prices up by as much as 90%. And labor shortages are crippling entire industries. And just now, in that clip that we played, Putin admitted that military spending has gone through the roof. This isn't just a small problem. What we are seeing is a real-time economic collapse of a nation that once seemed unstoppable. In this video, we'll uncover the truth behind Russia's economic lie, the hidden costs of war, and the collapse of its oil empire. Let's dive in. The headlines from the Kremlin might tell you Russia's economy grew by 4.3% in 2024, which sounds impressive at first glance. The government loves to point to this number, saying it outpaced countries like the United States or the United Kingdom. They'll claim it's proof that their policies are working, that Russia is standing strong despite all the challenges. But all those are fake statistics, and growth isn't what it seems. It's not coming from new factories, booming businesses, or a thriving middle class. It's mostly tied to one thing: military spending. The Kremlin has been pouring money into tanks, missiles, and soldiers' salaries like there's no tomorrow. Defense spending even jumped by 70% last year, eating up a third of the national budget. This isn't the kind of growth that builds a healthy economy. It's like putting all of your money into a single stock and hoping that it never crashes. When the war slows down or the money runs out, what happens then? The whole thing starts to wobble. And it's already wobbling. Take a look at the civilian sectors, the parts of the economy that keep a country running day to day. Industries like construction, retail, and manufacturing are barely keeping their heads above water. Retail sales dropped in 2024, meaning people are buying fewer clothes, appliances, and other goods. Construction is down too, with new housing projects falling 10%. This is because high interest rates make mortgages unaffordable. Factories that make things like furniture or packaged food are running at lower capacity, some at just 60% of what they could produce. Shops aren't selling as much, new buildings aren't going up as fast, and factories are producing less. Why? The government's focus is on the war machine, not on helping regular businesses grow. The 4.3% growth figure is like a shiny apple that's rotten on the inside. It looks good until you take a bite. The reality is that Russia's economy is being propped up by a temporary boost, and temporary boosts don't last forever. Now, every time we cover Russia's collapse, the algorithm tries to bury it. So if you're still watching, take a second to hit that like and subscribe button. It helps this video reach a ton more people, especially the ones the Kremlin doesn't want seeing this. Now, let's talk about inflation, because this is where things really start hitting regular people pretty hard. In March of this year, inflation was around 10%, down from a staggering 12.9% late last year, but still way too high. Higher than what most countries are aiming for. Imagine going to the store and seeing the price of bread or eggs jump by 10% or more in a single year. That's what Russians are dealing with. Butter, vegetables, and other basics have seen double-digit price hikes. For families already stretching their budgets, this is a punch to the gut. A loaf of bread that cost 50 rubles a year ago now might be 55 or 60 rubles. Milk, eggs, and cooking oil have seen similar jumps. For someone earning an average wage of about 70,000 rubles a month, or $700, these price hikes eat up a big chunk of their budget. Pensions, which many older Russians rely on, actually dropped in value by 0.7% last year when you account for inflation. So people are paying more for less, and their savings or fixed incomes aren't keeping up. To try and slow this price spiral, Russia's central bank has jacked up interest rates to a whopping 21%. That's one of the highest interest rates in the world right now. The idea is to make borrowing money so expensive that people and businesses stop spending as much, which should cool down prices. But here's the catch. High interest rates are like hitting the brakes on the economy. Businesses can't afford to borrow money to expand or even keep running. Small shops, cafes, and startups are hit the hardest. Many are closing because they can't afford loans. Regular people can't get loans for cars or homes. The real estate sector, for example, is taking a beating because nobody can afford mortgages anymore. New home sales are down and developers are sitting on unsold properties. And when businesses can't grow or start laying people off, the whole economy feels that pain. The central bank is trying to put out the fire, but it's starting another one in the process. Then there's the labor shortage, which is like a slow poison for Russia's economy. Right now, the country is short about 2.6 million workers. And that's not a small number. It's like an entire city's worth of people missing from the workforce. Why is that happening? A big reason is the war in Ukraine. Hundreds of thousands of men have been sent off to fight, and many won't come back. Others have fled the country to avoid being drafted, especially younger, skilled workers in fields like tech and finance. In 2022 alone, an estimated 750,000 people left, and the trickle hasn't stopped. And these aren't just random workers, they're often skilled folks like engineers, programmers, and doctors. Add to that the fact that fewer migrant workers are coming to Russia because of the unstable situation, and you've got a recipe for disaster. Factories, hospitals, and schools are struggling to find enough people to keep things running. Some industries, like construction, are operating at half capacity because they just don't have the manpower to do the work. This worker shortage is pushing wages up, which might sound like good news, but it's a double-edged sword. Recently, salaries rose by 17.1% on average, and even after inflation, that's just under a 7% increase in real terms. Higher wages mean people have more money to spend, which fuels demand and keeps prices climbing. But businesses are struggling to pay these higher wages, especially smaller ones that don't have government contracts. A small factory or store can't always afford to pay more, so they're either raising prices or cutting jobs. Some are cutting back or even just closing up shop. And the sectors hit the hardest, like retail or construction, aren't the ones getting fat military contracts. So while soldiers and defense workers might be cashing bigger checks, the rest of the economy is just limping along. Higher wages also mean people are spending more, which fuels inflation, the very thing the central bank is trying to stop. It's a vicious cycle. Not enough workers, higher costs, pricier goods, and a weaker economy. Sanctions are another massive weight dragging Russia down. When Russia invaded Ukraine in 2022, the West hit back with tough penalties. They froze bank accounts, banned tech imports, and cut oil sales. At first, Russia found workarounds like selling oil to China and India, but now the damage is clear. Oil revenues, which account for 40% of Russia's economy, dropped 35% year-on-year in May of 2025. That's billions of dollars gone. Money that used to pay for school, roads, and the military. The EU's coal ban and a $60 per barrel oil price cap are starving the government of cash. Tech sanctions are just as bad. Car factories can't get parts, so production lines are idle. And dealerships that once had full lots now sit empty. These sanctions are like a slow chokehold, squeezing Russia's economy tighter every day. The country's running out of ways to dodge the pain, and the collapse is becoming impossible to ignore. Now, let's talk about Russia's growing mountain of debt, because it's another sign of how shaky things are getting. Since the 2022 invasion of Ukraine, Russia's Ministry of Finance has been borrowing like crazy, issuing $128 billion in federal loan bonds, or OFZ, to keep the government running. That's a huge number, especially when you consider that $32 billion of it was added just since January of 2025. To put it in perspective, Russia's entire economy in 2024 was worth $2.24 trillion, just shy of New York's economy at $2.3 trillion. Piling on this much debt in such a short time is like maxing out a credit card to pay for a war that's already draining the bank. With sanctions biting, borrowing this much money is a risky move. It's helping cover the bills, for now, but what happens when those loans come due? Russia is betting on a future it might not be able to afford. At this point, you might be thinking, even with sanctions, Russia still has oil, right? That should be enough to keep the country afloat. But that assumption couldn't be more wrong. Oil has been Russia's economic lifeline for decades, and now that lifeline is fraying fast. In 2025, oil and gas still account for around 40% of Russia's GDP and more than a third of its federal budget. But the numbers are unraveling. The price of Urals crude, Russia's main export blend, plunged to around $56 a barrel this year, its lowest level since the pandemic. That's well below the $69 per barrel price the Kremlin used to balance its budget. The consequences are brutal. In just the first quarter of 2025, Rosneft's net profits collapsed by 57%, and oil production hit a 9-year low. Even as Russia tries to run away from Europe and reroute exports to countries like India and China, it's forced to sell at steep discounts. More often than not, it sells at $20 or more below global benchmarks, just to stay in the game. And it's not just about prices. Russia's oil infrastructure is under strain. Refineries are aging, equipment imports are restricted, and the so-called shadow fleet of tankers used to dodge sanctions is shrinking as enforcement tightens. In May of 2025, seaborne oil revenues dropped by 8% month on month, even though export volumes barely changed. This isn't the first time Russia's oil gamble has backfired. In 2008, a similar price crash sent shockwaves through the economy. But today, the stakes are even higher. The war in Ukraine has ballooned military spending, and the government is bleeding cash. When oil revenues fall short, the Kremlin has to raid its sovereign wealth fund, which is already shrinking or slash spending elsewhere. Meanwhile, the world is moving on. Global demand for fossil fuels is plateauing. Clean energy investments are rising. And Russia, still tethered to a 20th century economic model, is watching its most valuable asset lose relevance. So yes, Russia still has oil, but in 2025, oil is no longer saving Russia. It's just exposing how vulnerable the country really is. And it's not just oil. Other industries are feeling the squeeze as well. Take car manufacturing, for example. Russia used to rely on imported parts from places like Germany and Japan. Now those supply chains are cut off. Production's down 40% since 2022, and the cars being made are of lower quality, often using makeshift components from China. Factories are either shutting down or trying to cobble together parts from less reliable sources, like China. The result? Fewer cars, lower quality, and higher prices. The same story is playing out in electronics, machinery, and even agriculture, where Russia can't get the modern equipment it needs. Farmers are struggling to get modern tractors or fertilizers, so crop yields are falling. Sanctions are like a wall around Russia's economy, and every day that wall gets a little higher. Add all these issues up into a bigger picture, and it's clear that Russia's economy is in deep trouble. The government can point to low unemployment, which is just at 2.3%, or the strong ruble, which has gained 40% against other currencies this year. But those are just distractions. Unemployment is low because so many people have left or been drafted, not because jobs are plentiful. The ruble's strength is artificial, propped up by tight controls and oil sales that are drying up. The reality is Russia's economy is like a house of cards, and the wind is starting to blow. To really understand why Russia is in this mess, we need to go back and look at where it all started. This crisis didn't pop up overnight. It's been building up for years, rooted in decisions, conflicts, and weaknesses that have finally come to a head. The 2022 invasion of Ukraine was the spark that lit that fire. When Russia sent troops across the border, the world responded with sanctions that hit like a sledgehammer. Western countries, led by the United States and the European Union, froze $300 billion of Russia's foreign reserves. This was money that the government was counting on to stabilize the ruble and pay its bills. Imagine having your entire savings account locked away in a vault that you can't open. That's what happened to Russia. Those sanctions also cut off access to global financial systems. This made it nearly impossible for Russian banks and companies to do business with the rest of the world. Companies couldn't buy supplies, and exporters couldn't get paid. The invasion didn't just trigger sanctions, it changed Russia's place in the global economy. Before 2022, Russia was a major player in energy markets, supplying gas and oil to Europe. Countries like Germany and Italy relied on Russian pipelines to keep their homes warm and factories running. Europe depended on Russia for 45% of its gas in 2021. But after the invasion, Europe pivoted fast. They built new terminals for liquefied natural gas from places like Qatar and the United States. They invested in wind and solar power. By 2025, Russia's share of Europe's energy market has shrunk from 45% to just 13%. In fact, the plan is to lower it more. That's a catastrophic loss for a country that depends on energy for nearly half its income. Now, Russia is scrambling to sell its oil to China and India at cut-rate prices, and even those deals are shaky at best. Western businesses also pulled out in droves, and the impact was huge. Big names like McDonald's, Apple, and Toyota shut their Russian operations. Over 1,000 companies left, costing Russia billions in revenue and tens of thousands of jobs. The auto industry is a good example. Without Western parts, production's crashed, and new cars are either scarce or overpriced. This exit wasn't just about money. It was a signal that Russia's no longer a safe place to do business. The trust is gone, and that's something you don't rebuild overnight. Russia tried to get around this by trading more with countries like China and India, but it's just not the same. These countries drive hard bargains, buying Russian oil at steep discounts, and they don't have the same demand for Russian goods that Europe once did. The result is a trade network that's a shadow of what it used to be. But the crisis isn't just about sanctions or the war. Russia's economy has a deeper problem. It's way too dependent on oil and gas. About 40% of its GDP and 60% of its exports come from energy. That's like betting your entire future on just one industry. When oil prices are high, like they were in the 2000s, Russia's economy looked great. New apartments go up, people buy cars, and the government hands out raises. But when the prices drop, like they have in 2025, the whole system starts to crumble. With global oil demand expected to stay flat, there's no quick fix in sight. This reliance on energy isn't new. For decades, Russia has leaned on its vast oil and gas fields to fund everything from schools to submarines. Back in the 2000s, high oil prices fueled a boom that lifted millions of Russians into the middle class. But instead of using that money to build new industries or invest in technology, the government doubled down on energy. Other sectors like manufacturing or tech were left to limp along. Now, with energy revenues tanking, there's nothing to fall back on. It's like a farmer who only grows one crop. When the harvest fails, there is no backup plan. Another big issue is how Russia's economy is structured. It's heavily controlled by the state, with the government calling the shots on everything from banks to oil companies. This setup makes it hard for private businesses to thrive. Entrepreneurs face endless red tape, corruption, and the constant threat of government interference. Private businesses face taxes, bribes, and the risk of government takeover. This setup kills innovation. Entrepreneurs can't thrive when they're constantly looking over their shoulder. As a result, Russia's economy lacks the diversity and flexibility it needs to adapt to challenges. Compare that to a country like South Korea, where the tech giants like Samsung drive innovation and growth. Russia has no equivalent because the system stifles anyone who tries to think outside the box. Countries like Norway also rely on oil, but have diversified their economies with things like shipping or renewables. Russia never did, and it's finally paying the price. Speaking of bad structures and state control, Russia is overly corrupt. In fact, corruption is like a leak in Russia's economic engine, draining money that could fix schools, hospitals, or roads. And it's not just a few bad apples. It's a system where bribes and kickbacks are part of doing business. For example, to open a small shop or get a construction permit, owners often have to pay officials under the table. These bribes can eat up 10% or more of a business's profits, money that could go to hiring workers or buying more equipment. Big companies, especially in oil and gas, are hit even harder. State officials often demand a cut of major deals, and those costs get passed on to consumers through higher prices. Last year, Transparency International ranked Russia among one of the most corrupt countries, with a score of 26 out of 100. This was way worse than many of its neighbors. This corruption scares off foreign investors who don't want to deal with shady deals or sudden government takeovers. Back in 2018, IKEA pulled out of Russia after years of battling corrupt officials. And stories like that are common. Even Russian businesses struggle, as small firms spend up to 20% of their time dealing with inspections and red tape. This is often just a pretext for more bribes. Meanwhile, the money siphoned off ends up in the hands of a few elites, who buy mansions abroad or stash the cash in offshore accounts. In 2024, leaked reports showed $15 billion in suspicious funds flowing out of Russia, enough to fund healthcare for millions. This greed widens the gap between rich and poor, leaving regular Russians to deal with crumbling infrastructure and rising prices. It's a cycle that keeps the economy stuck because the people who could fix it benefit from keeping things broken. With corruption eating away at every level, it's no wonder Russia's struggling just to keep up. The tech sector is another perfect example of Russia's badly structured economy. Russia used to have a growing tech industry, with companies like Yandex and Mail.ru competing on the global stage. But since 2022, that industry has been gutted. Sanctions have cut off access to Western software, cloud services, and hardware like microchips. This has made it hard to build or maintain tech products. At the same time, thousands of skilled programmers and engineers have left the country. Even before 2022, Russia was losing talent. 100,000 IT workers left in 2022 alone, moving to places like Estonia or Armenia. The tech workforce is down 20%, and companies are struggling to fill the gaps. These are the people who could have built the next big app or startup, but now they're working in other places like Israel. Russia's brain drain is bleeding its future dry, and is quickly becoming one of Russia's biggest headaches. Without tech, Russia can't modernize, and that's a death sentence in today's economy. These structural problems, like state control, lack of diversity, and losing talent, have been around for years. But the war and sanctions have turned them into a full-blown crisis. The government's response has been to double down on military spending, hoping it can power through the pain. But that's like treating a broken leg with a Band-Aid. It might hold for a while, but the underlying damage is only getting worse. Russia's economy is paying the price for years of bad decisions, and that bill is a come due. With all of these issues piling up, the effects are rippling through Russian society and beyond. The economic squeeze is making life harder for millions of Russians. About 21 million people, roughly 1 in 7, are living below the poverty line. That's a number that's been creeping up as prices rise and wages fall to keep pace. In small towns where factories have closed up or farms can't hire enough workers, families are barely scraping by. A trip to the grocery store means skipping meat or fresh fruit because prices have jumped 15% on average. Other things like butter and potatoes are hitting even higher spikes. For a family earning 70,000 rubles a month, that's a big chunk of their budget gone. Many are turning to cheaper, low-quality foods like processed noodles instead of fresh vegetables just to fill their stomachs. Even in cities like Moscow, the middle class is feeling squeezed. People who once dreamed of vacations or new cars are now focused on rent and utilities. Electricity and gas bills have climbed 12% since last year, and with winter looming, those costs will bite harder. The government used to help with subsidies, but those are being slashed to save cash. Some families are doubling up, moving in with relatives to split bills. Others are taking on side gigs like driving taxis or selling homemade goods to make ends meet. It's a stark change from a decade ago, when Russia's economy seemed to promise a brighter future. For many Russians, the daily grind is getting grimmer. Healthcare is another area taking a hit. Budget cuts have left hospitals underfunded, with spending down 8% in real terms in 2024, and 2025 is just as tight. In rural areas, clinics are closing, forcing people to travel hours for a checkup. In cities, hospitals are packed, with patients waiting weeks for tests or months for surgeries. Medicine shortages are common. Drugs for diabetes or heart conditions are either out of stock or cost 20% more. Some Russians are resorting to risky alternatives like buying pills online or using herbal remedies. Stories are circulating about people buying medicine on the black market because pharmacies are out of stock. For older folks who need regular care, this is a scary time. The healthcare system's cracks are turning into gaps, and people are falling through. Education is suffering as well. Schools are struggling to hire teachers because salaries are low, about $500 a month for public school staff. Many qualified educators have left for better-paying jobs abroad or in Russia's private sector. In 2024, the teacher shortage hit 11%, leading to bigger classes and less individual attention for kids. In remote areas, some schools have just shut down, leaving students to rely on patchy internet for lessons. Even in cities, supplies like textbooks or computers are hard to come by. Classrooms are overcrowded, and some schools can't afford basic supplies like textbooks or heating. This isn't just about today's students, it's about Russia's future. A weaker education system means fewer skilled workers in the future, which will make it even harder for Russia to climb out of this economic hole. Kids who miss out on a good education won't be ready to take on jobs in tech or science, which the country needs to break free from its oil addiction. The government's focus on the war isn't helping. In 2025, a staggering 41% of the federal budget is going to defense and security. That is a massive chunk of money, enough to build thousands of schools or hospitals. Military spending is through the roof, and it's not just about weapons. Instead, it's being funneled into missiles, military bases, and signing bonuses for new soldiers. Some regions, like Belgorod, are offering recruit payouts of up to 3 million rubles, or about $29,000, just to sign up for the military. That's a fortune for many families, but it's a sign of desperation. There aren't enough willing fighters, so the government is just throwing cash at the problem. Meanwhile, regular workers like teachers or nurses are lucky to see a fraction of that in their paychecks. This focus on war spending is also starving other parts of the economy. Infrastructure like roads and railways are crumbling because there's no money to maintain them. The National Welfare Fund, Russia's rainy day savings, is projected to run dry by early 2026. Once that happens, the government will have to borrow more or cut spending even further. So as you can see, this war in Ukraine, now in its third year, is draining resources at a time when the economy's already on its knees. At this point, you're probably thinking that Russia should just withdraw and bring the war to an end, right? Well, here's the twist. Russia's economy is now so tied to the war that stopping it could hurt even more. The war has become a lifeline for some parts of the country. Defense factories in places like Tula are churning out weapons, employing 1.2 million people, 10% of Russia's workforce in 2025. Arms exports like missiles sold to countries like Iran brought in $14 billion last year, a rare bright spot in a shrinking economy. Without the war, those jobs and deals could vanish, sending cities into a tailspin. And the Kremlin knows this, so it's pushing to keep the fighting going, betting that war spending will hold things together. It's like a gambler doubling down on a bad hand, hoping for a miracle. Of course, this comes at a cost. A budget deficit of 3 trillion rubles, or about $34.4 billion in 2025, is making it harder to fund both the military and basic services. Some analysts think this pressure could force Russia to rethink its strategy. It might force them to pull back from Ukraine or seek a ceasefire to ease the economic pain. Others warn the opposite. A government under siege might tighten its control, cracking down on dissent to stay in power. In 2024, Russia passed laws limiting free speech and jailing protesters. In that same period, arrests for anti-state activities rose 30% from the year before. A weaker economy could push the Kremlin to double down on these tactics, risking more unrest. So until a better plan comes along, Russia will unfortunately keep spending on war and keep pushing on. This lopsided spending is creating a divide in Russian society. People working in the military or defense industries are doing okay, some are even getting raises. But everyone else, from shopkeepers to school teachers, are being left behind. This gap is starting to stir up frustration. In cities, you can hear grumbling about how the government cares more about tanks than people. In markets or on social media, you can hear whispers of frustration. People wondering why tanks get more funding than hospitals. Protests are rare because the Kremlin cracks down hard. But some small acts of dissent, like graffiti or online petitions, are popping up. If the economy keeps sliding, that frustration could grow into something bigger. Realistically, though, it might take years to challenge the regime. For now, President Putin's regime is holding steady. But history shows that economic pain can spark change, like it did in the Soviet Union's final days. On the global stage, Russia's crisis is causing headaches as well. Russia is a major supplier of grain, gas, and metals, and disruptions in those exports are driving up prices worldwide. Russia's a major supplier of wheat, and with production down 10% in 2025, global food prices are climbing. Farmers can't get modern machinery or enough workers, so harvests are smaller. Countries in Africa and the Middle East, like Egypt and Nigeria, which rely on Russian grain, are facing higher food costs. This is pushing more people into hunger. The UN estimates that global food insecurity has worsened partly because of disruptions in Russian exports. Higher prices are pushing millions closer to hunger, and in some areas, they're sparking protests. Gas prices are another issue. Even though Europe has cut back on Russian gas, the global market is still tight, and any hiccup in Russia's supply chain sends prices climbing. In places like Pakistan or Thailand, families are paying more to cook or heat their homes. Factories in India and Brazil are facing higher energy costs, which means pricier goods from clothes to cars. Metals like nickel, aluminum, and palladium are also affected. Russia's a top producer, but sanctions and production issues have cut exports by 5% this year. That's bad news for industries like car manufacturing and construction, which need these materials. In places like Japan and Mexico, factories are paying more for raw materials, which means higher prices for consumers. The price of a new electric vehicle or skyscraper is creeping up because of Russia's troubles. Your next smartphone or apartment building might cost a bit more because of Russia's economic troubles. These supply chain snags show how one country's crisis can touch lives thousands of miles away, from factory workers to shoppers. The ripple effect is real. When Russia's economy sneezes, the rest of the world catches a cold. Politically, this crisis could shake things up inside of Russia and beyond. Economic hardship tends to make people restless, and while the government has a tight grip on power, there are signs of strain. Public opinion polls show inflation is the top worry for Russians, even more than the war. In private conversations, you will hear frustration bubbling up, though public protests are rare. This is mainly because the government's quick to shut them down. If prices keep rising and living standards keep falling, the Kremlin might face more unrest. Though any real challenge to the regime will likely take years to build. A weaker economy could also force Russia to rethink its aggressive stance abroad, maybe pushing for peace talks to ease the pressure. The war in Ukraine cost an estimated $200 billion a year, and with oil revenues down, that's a pretty heavy load. Russia might push for peace talks or a smaller military presence, though it's unlikely to back down completely. These domestic and global effects paint a picture of a country at a crossroads. Russia's economic crisis isn't just about today, it's shaping what comes next. So let's turn to the future and explore what might lie ahead. Can Russia pull itself out of this hole, or is it headed for an even bigger fall? The most immediate risk is a full-blown recession as a result of the huge deficit that Russia has. Oil and gas revenues, which used to fill the coffers, are down 35% from last year. Taxes are bringing in less because businesses and consumers are spending less. If these trends continue, Russia could hit a wall by 2026. A recession would hit hard. Small businesses, which employ millions, are already struggling with high interest rates and falling demand. A downturn could push many over the edge, leading to layoffs and higher unemployment. The jobless rate is low, now at 2.3%, but that's misleading. It's low because so many workers have left or been drafted, or died in the war. A recession could push unemployment to 5% or higher, a level Russia hasn't seen in years. For families, that means lost income and more worry about paying bills or buying food. The real estate sector, already down 10% in new projects, could grind to a halt, leaving construction workers and developers out of a job. The ripple effects would spread, and other industries tied to housing would suffer. The government might try to soften the blow with subsidies or tax breaks, but with cash running low, there's only so much they can do. Borrowing isn't easy when you're under sanctions. International banks won't touch Russia, and domestic loans could come with sky-high interest rates, 21% and climbing. Printing money is another option, but that would fuel inflation, which is already at 9.9%. Higher inflation would mean even higher prices of groceries and utilities, hitting Russians where it hurts. Cutting spending seems like the most likely move, but with 41% of the budget tied to defense, the government's hands are kind of tied. Scaling back military spending could weaken the war effort, which the Kremlin sees as non-negotiable. So budget cuts would likely hit social programs or healthcare areas that are already stretched thin. A recession would expose just how fragile Russia's economy is, stripping away the illusion of growth. A recession would also hit Russia's global standing. A weaker economy means less money for military adventures or foreign aid, which Russia uses to flex its influence in places like Syria or Africa. It could also make Russia more dependent on China, which is already stepping in to fill the gap left by Western trade. But that's a risky game. China's support comes with strings attached, like access to Russian resources or military bases. A recession could lock Russia into a cycle of debt and reliance, reducing its ability to act independently on the world stage. Another possibility is stagnation, where the economy doesn't crash, but it doesn't grow much either. This is what happened to the Soviet Union in the 1970s and 1980s, when it got stuck in a rut of low growth and declining living standards. Russia's already showing signs of this. Investment in non-military sectors like tech or healthcare is down 4% from last year. Without new factories, research labs, or startups, the economy can't innovate or compete. It's like running a car on fumes. You can keep going for a while, but you're not getting very far. Russia's stuck, relying on old industries like oil and mining while the rest of the world moves forward. Stagnation would mean a slow decline for Russia. Living standards would erode as prices outpace wages. The middle class, which grew during the oil boom of the 2000s, could shrink further, leaving more people in poverty. Young people, seeing no future, might leave in even greater numbers, worsening the brain drain. Industries would limp along, relying on outdated technology and makeshift solutions. Russia's already leaning heavily on Chinese imports to replace Western goods. However, those come with their own problems, like lower quality and higher costs. In a stagnant economy, life gets harder bit by bit. Consumer goods like phones or cars would be imported from China at high costs, squeezing budgets. The government might try to distract people with propaganda or small handouts, but that only works for so long. Over time, the country could become a shadow of its former self. Still big, but no longer a real economic power. So what does stagnation look like in practice? Picture cities with crumbling roads and outdated factories. Schools and hospitals would keep limping along, underfunded and understaffed. Wages wouldn't keep up with prices, so families would keep cutting back. Eventually, frustration could build, especially among younger generations who want a better future. Stagnation isn't as dramatic as a recession, but it's just as damaging in the long run. It's the kind of decline the Soviet Union saw, and it's a real risk if nothing changes. There's a faint hope Russia could turn things around with reforms, but it's a steep climb. The economy's stuck because the government controls too much, from oil companies to banks, and a small group of elites, well, they like it that way. Loosening that grip could help. For example, giving small businesses a break from heavy taxes or endless inspections would let them grow. This would create jobs for younger Russians who might otherwise leave. Back in the early 2010s, Russia tried something like this. And tax cuts for tech startups helped companies like Yandex take off, employing thousands. Those small steps showed what's possible when the government eases up. Today, Russia could invest in new industries like green energy or advanced manufacturing to rely less on oil. Solar farms or battery factories could create jobs and keep talented engineers from moving to places like Estonia. Boosting school funding would also help, training kids for tech or science jobs instead of leaving them stuck in a system built for oil. But there's a catch. Reforms threaten the elites who run state companies and rake in profits from shady deals. These insiders, from oil bosses to government officials, have little reason to shake things up. In 2016, a push to privatize some state firms stalled because powerful groups fought to keep control. Plus, the war in Ukraine keeps Russia locked in a standoff with the West, so foreign investors who could bring in money and tech, they stay away. Sanctions won't vanish overnight, even if the war ends. Still, economic pain might force small changes. If prices keep rising and people keep getting angrier, the Kremlin might try tax breaks or new training programs to calm things down. This wouldn't fix everything, but they'd be a start. Russia's leaders face a choice: stick with a sinking system or take a risk on something new. History says that they'll resist, but pressure from below might just crack the door open. At the end of the day, the verdict is clear. Russia's economy is in a rough spot, despite what the government wants you to believe. The 4% growth in 2024 was a mirage, built on military spending that's really actually just draining the country dry. The crisis is more than numbers. It's a lesson. Russia shows how fast a giant can fall when it bets too much on one thing, like oil, or picks fights it can't afford, like Ukraine. It's a warning to every country. Build a strong, varied economy, or risk crumbling under pressure. Russia's people are paying the price, and the world is feeling the fallout. And whether it collapses further or claws its way back, Russia's story will shape the future, from global trade to superpower rivalries. It's a nation on the edge, and what happens next could change everything. Thanks for watching.